buying your first home or your second home, you need to do it. Do not let rates scare you from making wise investments. We do not wait to buy real estate, we... There you go. $350,000 average price of a home. Right now, a 30-year with decent credit, you're going to be paying 7.25% interest, which means your monthly payment is $2,387.62 per month. $2,387.62. That's what the average consumer now is paying for housing. Now, here's what you got to understand about housing. Housing is driven by this number, not this number. It all goes to affordability. So, can I afford $2,387 a month? If I can, I buy. If I can't, I rent. Does anybody know what the average rental property is right now, monthly? The average rent is $1,950. So to live in a house is going to cost you about $400 more per month. To which I say that doesn't mean you shouldn't buy. It means you should buy a 4-bedroom house and rent one of them out to a friend or a family member and get the $400 a month, because you don't wait to buy. Now here's why. This is the latest Kiplinger letter. Here's what they're telling us. The economy is set to grow more slowly in 2024, figure on a 1.1% GDP growth versus 2.3% in 2023. Because GDP growth is going to be lower, about half of what it was in 2023, the Feds are likely to cut rates. Where they see rates going is 6.3. Okay, now everybody get out your fun little calculator. Okay, now, here's what we do. Remember, home buying is tied to affordability. If this number represents affordability and rates drop, prices rise. When rates go down, prices go up. When rates go up, prices come down. With rates at 7.5, prices come down. With rates at 6.3, prices go up. Can anybody tell me what the price goes up to when we drop the rate to 6.3. You guys have got to get used to using this calculator. Okay, it's the Real Estate Master 3X. Okay, so all you do is you put in the information in the calculator. So 350 is the loan amount, 7.25 is the interest rate, 30 years is the term. That gives us a payment of $2,387.62. That's where this number came from. Now we keep the payment the same. Change the rate to 6.3 as an interest rate, and then your loan amount adjusts. What's the number? $385,738.60. Okay, now what's the difference between 350 and 385? Okay, somebody explain to me what that number represents. Equity in what? Your house. How come you have 35 grand equity in your house all of a sudden? Because the value went up. Why did the value go up? Because the interest rate went down. Okay? So for those of you that have been, oh, I think I should buy, but interest rates are so high, guys, now is the right time to buy. It is a buyer's market. Days on market has gone up exponentially. I think we've increased 300% days on market from 15 to 45. And sellers are going, what's going on? The market's broken. Nobody's writing me an offer. And prices are dropping. Meanwhile, concessions. Sellers are now willing to pay for your down payment. They're willing to pay your closing costs. They're willing to pay for anything you need. On FHA, VA, you can get up to 6% seller contribution. The seller will pay on your behalf. If you get a USDA loan, the seller can contribute up to 10% of your closing costs so that you can buy their house. Which means if you went out and bought a $350,000 house right now using a USDA loan, which you can get if you're buying in Post Falls or Rathdrum, the seller could gift you 35 grand to buy the house. Now is the time you buy real estate. Not when rates go down and it's favorable for you. You buy when it's unfavorable for the market, and that's now. So again, I'm going to reiterate this. If you guys have not met with Michelle and the team about buying your first home or your second home, you need to do it. Do not let rates scare you from making wise investments. We do not wait to buy real estate. There you go.